seminars for both beginning and seasoned Forex traders 4 times a week, explaining complicated things in a simple way to make Forex trading comprehensible to everyone.
Call us today on 01-821-8274 or 080-3457-3593 or email us at nigeria@alpari.org or visit www.alpari-forex.com and experience dependability and innovation in online Forex trading.
We're still talking about how you can place your buy and sell order. Michael Akinwale, a currency analyst from Alpari, is here and he's telling us more about that. Now we're looking at some charts. Perhaps we can have chart 2 again to get a better picture of what you were talking about, how the steps one can take in placing and buying orders.
Okay, I think from that chart 2, we saw that the first thing you pick your currency, you pick the quantity you want to buy, which is your lot size. Then you set your stop loss and take profit.
Okay, I remember you did stop at number 5.
Yeah, then we looked at 4, which is whether you're placing an instant order, you're placing pending orders. Then you look at number 5, where you're clicking whether you're buying or selling. You sell when you expect price to go down, you buy when you expect price to go up, basically. So you just click on any of them and immediately the order is processed and you have an open position. So if price goes in your favor, that position will end up profitable. And if price doesn't go in your favor, then it will actually go up negative. So depending on where it goes. So
one has to keep an eye on, as in having the equation, or how do I put it, all your analysis right,
sure.
Tools right.
You must have finished all your analysis before you go to this step. You've done your analysis, you've seen that price wants to place, for instance, like I said on Monday, it was going to go up. Then you just click your new order. And you have you set the quantity you want to buy, you set all that, and you click buy or sell, and the order is open immediately for you.
Now, the order type seems a little bit tricky. Could you just shed more light on that?
Okay. Now we have 2 types of orders.
Pending orders. Okay.
We have 2 types of orders. We have instant orders, and we have what we call pending orders.
Okay.
Let me give you a case scenario. Let's assume you have 1,000 naira, and someone told you that there's some T-shirts that they sell for 1,000 naira or something in the market. And you go to the market to buy that T-shirt for 1,000, and you actually made the price at 1,000. What do? You pay instantly and you collect the shirt. That's what we call instant order. You go there, you pick it up immediately. But let's assume you go to the market and they told you that T-shirt right now is selling for 1,050 naira, and you don't have the 50 naira. And the guy tells you, if you don't mind, by tomorrow we're going to get that T-shirt at 1,000 naira again. So you can drop the money. Immediately it's 1,000. I'll buy it for you and you come and pick it up. If you look at that order, it's pending, because the shirt will not be bought until the price comes back to 1,000. Okay. So in the same way in the market, you can actually set instant orders. You go straight into the market, you place your buy or sell, and immediately the order is executed by the broker for you. But
so I just leave my money for the pending order? I can leave my money there?
You can leave the order there.
Okay.
It won't be executed until price gets to that forecast, that your expectation, where you want price to go to, whether it's a buy or sell, until price gets there before that order is executed. So and all this happens automatically. You don't need to be there. Maybe it get. Let me give you a case scenario. Before in the world's market, whether it's stocks, options, you used to trade over the phone. You have to call your broker. Even when you place I think you can even place pending orders over the phone. But
that is still being done.
Yeah,
especially for
people trade over the phone, especially some of those big firms. But these days, you don't really need no matter how much you are trading, you can do it over the internet, because it becomes easier. We have more sophisticated softwares, that does everything.
And the secure firewalls around the software prevent that. I'm asking, is that
prevent any hacker from coming anywhere? So everything is so secure these days that you don't even need to actually go over the phone to actually place a trade. So what I'm saying is that if you have a pending, you want to place a pending order, it don't automatically, maybe the price gets to that point, it's taken immediately for you. So you don't need to be there.
No, that's interesting. Now, after a trader places an order, is it possible to adjust the order while the trade is on?
Sure. For instance, let's assume I'm trying to find
I want
simple example.
1,005 or that 1,050, and then all of a sudden I just change my mind.
Okay. Let me explain this. You cannot change. Let's assume I want to buy the USD, for instance, and I bought USD let's say $100,000, which is one standard lot, $10 per pip. And I want to modify that order. So many times you cannot modify the quantity you're buying. I bought that quantity, I can't modify that. What you can modify is factors like your stop loss and your take profit. So let's assume, for instance, I came in at a certain price. I said I want to take 50 pips take profit, and price is getting towards my 50 pips, and I feel, this price will actually go up to 100 pips profit. I can actually go there and adjust that take profit to 100, basically. So what that does for me is that it gives me the flexibility to modify my order You know, these are simple, very simple things you do when you trade. You just modify the order. You can modify your stop loss, for instance, also. Let's assume you see that maybe you put a 50 pip stop loss, and you see that price is actually going towards a 50 pip stop loss, and you know that you don't want to lose that 50 pips. And you know that, okay, maybe if I make it 100, price might never get to the 100. You can go in there and modify that order and change it to 100 pips. And, you know, you continue from there. But you cannot change things like lot size. You know, you can't change things like the currency you are trading because you have already traded that currency. You can't go in there and change, you know, some of those factors.
Interesting. Now, can I was going to ask, are there any downsides to this? What kind of hurdles can a trader encounter?
Okay.
This?
So many times when you are trading, the only downside I feel you can have is your internet connection. If you don't have good internet, for instance, you know, there are times when the trader is trading and needs to close a trade, for instance. He needs to get out of a trade. And it goes there, or let me not use get out of a trade. Let me use going into a trade. Okay. Price is at a certain point, and that point is very crucial for him. He needs to place a buy order. And he goes in there and places his order. And let's assume he's using a very slow connection. You know, thank God we have fast connection in Nigeria now. You're using, when you're maybe like 5 years ago, you're using some of those ISPs that gives you, you know, heartbreaking kind of connection. And you try to place a trade, and your internet is breaking. What happens is that you see the order goes, and we have what we call like a requote. What the computer is going to tell you that the price has moved from that to your instant execution point. And so you have to, you know, you have to reorder again. So that's one of the major problems you can have. That's basically what you can have, internet connection. But if internet is good, nothing stops you from going in and coming out of the market. I can say categorically that internet is less than trading, especially when you want to go in fast and come out fast. The speed of internet, because the software you are trading with is what we call like, it's not a standalone software. What I mean is that it doesn't just work on your system. It's connecting to another server somewhere where it's getting the data feed from, and where it's placing the orders and the buy and sell orders from. So when you place a trade, the computer where you're working on has to connect to the back end server where it's going to execute the trade. So if your internet is not good, it has a problem with the connection. The trade is not going to go through. So that's basically the only problem you're going to have, and that's why some brokers even give you telephone options. You know, but it's basically for big accounts. People who are trading $50,000, $100,000 and above. But if you are trading $100, no broker is going to give you.
So you're saying it's not safer to go through that channel if you're trading?
No, what I'm saying physically is that let's assume you're trading big accounts. Okay. I mean big accounts, and maybe you have internet problem. You can actually call your broker and say, "Excuse me, I want to close this trade," and they will do that for you manually. You know, you have some of those options.
Okay. Now, how can closing an order after it has been opened?
Okay.
I believe there's a chart to support that.
Okay. Let's look at it. How do you close a trade? I think there's a final chart created for that. Closing a trade is almost as simple as opening it. Because when you place orders, the orders you've placed comes up in what we call your trading terminal. In your trading terminal, you see your open positions, and there you click on, you right click on the trade you want to click, and you have a window that pops up. That's the chart I actually wanted to show. When that screen pops up, there's a button there that just shows close trade. Immediately you click on the close trade. If your internet is good, the trade is closed immediately at the profit that you want.
What if there's some power outage or you lose connection at that point and you don't get it back until after an hour or several hours? Where is it? Would it be left open?
It's not left
automatically on its own?
Let me say this. If that's why we always recommend, depending on the kind of trader you are anyway, that you have your stop loss and your take profit in place when you are trading. Okay. Because if you have to have power outage or your internet is down,
you've already set your limits on losses and gains.
Take profit. So if price gets to your take profit while you are not there, it automatically closes for you. You know, but if you didn't set that in place and you want to close a trade and there's no connection, there's nothing you can do. You have to wait for the connection to come before you can actually close the trade, because you need the internet to actually trade. But closing the trade is very simple process. You know, it's just like the click is just click of a button and the trade is opened.
Okay, so how often should one interact or communicate with a broker, or they're just there? Is it an automated thing?
You see, I can say the broker is like a bank.
Okay.
Anytime, you know, for brokers who don't have presence close to you, you know, because if, let's assume you live in the UK and your broker is in the UK, you can walk up to the office anytime and say, okay, I have this complaint.
Okay, so they have a name, they have a face.
Sure, they have a face. But if your broker doesn't have a face, you can chat with them online.
How can one be sure that? How can I be sure that I'm chatting with a credible broker, one that is certified, one that is legal? No,
actually, I think one would have done that research even before you put your money with that broker. You understand? Okay. Because, you know, if you are what is that now? If you are a regulated broker, it's something of pride, because you have to come to a certain standard to be regulated. You understand? You know. So basically, brokers who are regulated have that on their website written clearly there that we are registered with this, registered with that, registered with all that. So that gives them a sense of pride. So you have known all that before you even, actually open an account with that broker. So when you're chatting with them, you know you're chatting with a reputable company, and whatever problem you have, we actually sort it out for you.
Okay. As one final one before I let you go. Now, as a trader, and perhaps I've been in contact with Alpari, I've gone for your courses, your classes, and all of that. Yeah. If I'm not sure about my broker, I have questions. I'm not just I have that feeling in my gut that I may not be taking the right decision. Can I come to Alpari to help me check out this, or run a background check on this broker or something?
Sure. Well, we can help you do that, but I'm going to go directly to say here that we just recommend that you use Alpari.
Okay.
Because Alpari has all that. Alpari is reputable, is registered with every regulatory body you can find. Alpari is the 5th largest broker in the world. So there's no other broker you need. Unless you're looking for some.
Okay. I guess you hit the nail on the head. Alpari. Why not Alpari?
Why not Alpari?
Okay, thank you so much, Michael, for your contribution. I've been speaking to Michael Akinwale, a currency analyst from Alpari, and we're talking about how to place and buy your sell and buy orders at the currencies market. Business Morning will return.